Welcome back to the channel, everyone. Today I want to talk about how the very first bank bailouts are starting to happen right now, what this means for the overall market and also for the wider economy. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Gold Telegraph tweeted saying, breaking news, Credit Suisse is in the early stages of weighing options to bolster its capital after a string of losses have eroded its financial buffers. So this basically means that Credit Suisse has taken heavy losses and therefore is nearing that margin call position. Therefore, it needs to bolster its capital or receive a bailout to ensure that it doesn't go bankrupt. But as I'm sure you'll know, when the mainstream media reports that a major institution is in only the early stages or weighing options, they basically mean that everybody's panicking and it's all hands on deck. I imagine that Credit Suisse are very, very close to this margin call position and therefore are scrambling for a bailout. It says the size of the increase or the size of the bailout so far is likely to be around $1 billion, but this has not yet been determined or agreed with. So it says this cash injection would help Switzerland's second biggest bank to recover from billions of dollars of losses in 2021 and a series of costly legal headaches. An analyst from Jefferies wrote saying the news, if confirmed, points to potentially more pain than we currently expected. It says the bank's shares have fallen by more than a fifth in the last year, and Fitch and Standard & Poor have both downgraded their debt rating for Credit Suisse this month. FINMA, the financial watchdog, gave Credit Suisse the lowest possible rating and said that its main concern was Credit Suisse's capitalization. I've also seen that Credit Suisse's credit default swaps have been going absolutely crazy recently, just showing that Credit Suisse is very, very close to default and requires a bailout urgently. Now this sounds very, very similar to the capital raisings or bailouts that were happening in 2008 before the main bailouts came. We saw banks over in the UK like Barclays and HSBC trying to raise capital privately to avoid a government bailout. This article says while Britain's banks are struggling to stay afloat, clutching at a £39 billion bailout to save their skins, Barclays are calmly paddling their way back to shore, while HSBC relaxes on the beach. When all was said and done, the UK government had to come in and bail out a number of UK banks, but Barclays actually declined the offer for a bailout sum because instead they managed to rely on investors to help raise necessary capital from their shareholders. Banks in the UK like Barclays and HSBC closed some sketchy behind closed doors private deals and managed to stay afloat by raising capital internally via shareholders instead of requiring government bailouts. In the end, Barclays managed to raise a total of £11 billion to avoid that government bailout behind closed doors, borrowing around $4 billion from the Qataris, which they had to pay massive fees for and never disclose those fees. And therefore, it wouldn't surprise me if Credit Suisse and other banks like UBS are trying to cut some of these behind closed doors sketchy deals to avoid the full government bailouts likely to follow in a few months' time. Guys, if you haven't already, be sure to sign up to BlockFi using the link in the description below to get up to $250 in free Bitcoin. With BlockFi, you can trade tons of different cryptocurrencies like Solana, Doge, Matic, Avalanche, Mana, Decentraland, Sandbox or Sand, and many others. BlockFi also have a rewards credit card offering an introductory rate of 3.5% cashback on your spending. BlockFi as a platform is also entirely free to use and requires no minimum balance. Gold Telegraph also tweeted saying a story that's not being talked about enough is how the Switzerland government has quietly proposed a public liquidity backstop for the big banks if one of them fails. Both UBS and Credit Suisse have made progress in how they would stabilise the banks and restructure themselves in a financial crisis. It seems like UBS and Credit Suisse could actually be ahead of the game considering they've been creating these plans since around March time. Credit Suisse and UBS have been trying to prepare for the incoming recession since March and are now looking to try and raise capital internally to ideally avoid government bailouts that I'm sure will follow soon. As I spoke about in my video yesterday, it's likely that when AMC and GameStop do squeeze, the Fed will have to print additional cash somewhere between $7 and $30 trillion all over again. These banks are obviously insanely over leveraged, everything's falling down around them, and they likely will need bailouts. I'm sure that once again it will be the US taxpayer and also the UK and European taxpayers that come to bail out these major banks, but at least this time we'll be on the winning side, having holding GameStop and AMC shares ready for the squeeze. It says UBS and Credit Suisse have made further progress in how they would stabilise and restructure themselves in a financial crisis. Big Swiss banks must demonstrate how they'd right themselves in the event of an emergency, or how they can be restructured or liquidated without obstacles while maintaining their systematically important functions in Switzerland. Therefore, these big banks are designing plans in how they can be liquidated without creating too many obstacles and without creating too much fuss for actual cash being held. Clearly, Kevin O'Leary is right by saying that some major players, like some of these major institutions, will be going bankrupt and will end up being liquidated. But at least this time we won't be losing all of our hard-earned money when these banks go under, as we're now holding so many AMC and GameStop shares ready for the squeeze. Something else that I saw that I found very, very interesting was this tweet from Lisa Abramovich, who said that Brent crude's prices have touched the highest levels since 2012. We can now see the price of oil has obviously run over $100 per barrel to $123 per barrel. The last time it was this high was back in 2011 and 2012, when the world's economy was rocky once again and we thought we could be entering another recession. And again, the last time it was above $120, $130 was obviously back in 2008 during the peak of the recession. I think if oil turns around and makes a U-turn now, and if the market continues blasting upwards and sets new highs, we could avoid the coming recession. However, I do not think the stock market will turn around, and I do not think the price of oil will slow down. I'm interested to see whether this price of oil reaches higher than it does back in 2008. Because I personally think that both Biden and the Fed botched inflation. They reacted too late, and now it's almost a certainty that the market will crash and the US and potentially the entire world will enter a recession. This is President Biden and Fed Reserve Chairman Jerome Powell were slow to recognise and act on inflation as it first emerged, and obviously continued to rise. And it says that instead, the Biden administration and policymakers were more focused on supplying stimulus to the US economy to counter the pandemic and fortify the labour market. But obviously where they went wrong is the fact they gave far too much stimulus to these institutions and hedge funds to continue pumping the market, and they didn't actually address the problem. The majority of this money didn't really filter down to everyday Americans other than the small individual stimulus checks that everybody received. The majority of this money was held by these large companies and these large institutions. And therefore they could continue to pump the market, covering up all the problems without actually improving these underlying companies. And finally, I also wanted to touch on Adam Aron's recent tweet. He said the press is now reporting that Top Gun Maverick is the highest grossing Memorial Day weekend movie of all time. Not just post-pandemic, but of all time. He said that's more than double the opening gross of the biggest ever Tom Cruise movie. And he added by saying, "What do we say to the movie theatres are dead crowd? Hashtag choke on that. Hashtag let them eat crow." It seems that the pandemic is well and truly over, and it seems that people are returning to the cinemas as they were in 2019 and before, and potentially in even greater numbers. Movies have continued to improve technology-wise over the last few years, and at the same time, everybody has realised over the last few years how much they used to take the cinemas and the movies for granted. As a result, people are spending more time out of their homes, more time spent with friends, and more time seeing great films like Top Gun Maverick. I expect the movie theatre industry to continue setting new records this year with all of the brilliant films that are lined up. And obviously as the market starts crashing and these hedge funds approach closer and closer to that margin call level, and as AMC starts rising, it will end up causing the squeeze. So guys, be sure to leave a comment down below and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.